Hello traders, you are welcome back to the Forex Geek channel. In this particular video, we are just going to be diving deep into one of the best MACD indicators for MetaTrader 4 and MetaTrader 5. All right, so if you are ready to upgrade your trading toolbox, you'll definitely want to stay tuned. Okay, one thing we all know in the trading community is that every trader has different favorites when it comes to indicators, right? What one person calls the best might not even make it onto another trader's chart. So the key is using tools that match your strategy and the way you read the markets. Okay, now let us just talk about the MACD, which is one of the most popular and trusted indicators worldwide. It's famous for helping traders catch momentum shifts and trend reversals. Okay, let me just quickly add MACD indicator, the standard MACD indicator, to the chart as the moving average, convergence, divergence. Okay, so in as much as this indicator is famous amongst traders worldwide, it has its limits, right? And that is the reason why in this video we are looking at a more advanced version specifically designed to give traders even more clarity and accuracy. Meanwhile, the indicator we want to look at in this video is a custom indicator, right? So you will need to download it from an external site. If you want to make use of it, you have to download it from a third-party site, but ensure that it's a trusted site. Okay, and once you've done that, you can then add it to your indicators library, after which you'll be able to use it on your chart. So basically, this upgraded MACD tool features two exponential moving averages plotted directly in the indicator window. Okay, okay, let's just add the indicator to the chart right now. I've already downloaded the indicator, right? I have it here on my chart. Okay, that's the MACD2 line, the MACD2 line indicator. All right, so you can see the difference, right? This is the standard MACD indicator that is built in. This is the standard built-in MACD indicator on the MT4 and MT5 platform. Then this is the MACD2 line indicator. This is the custom indicator that I am referring to. Okay, so as you can see, the indicator has two exponential moving averages plotted directly in the indicator window. One line is blue and the other line is red. Okay, making it super easy to distinguish between the faster and the slower moving averages at a glance. Now, instead of trying to interpret a single line and a histogram, you get a more detailed view of momentum changes. Okay, on top of that, it includes a volume histogram right beneath the exponential moving averages. This histogram shows the strength of the price moves, helping you quickly gauge if a trend has the backing it needs to continue or if it is likely to fizzle out. Okay, it adds an extra layer of confirmation before you make any decision at all, right? Another fantastic addition is the clearly drawn zero line, right? In as much as you can also find that on the standard MACD. Basically, I'm going to say the main difference between the standard and the MACD2 line is the two lines. Of course, the name of this indicator is the MACD2 line indicator, so you should know that that is like the big difference. Okay, so basically, just like with the standard MACD, the histogram helps you to know the strength of the price moves, helping you quickly gauge if a trend has the backing to continue or not. So basically, when the histogram bars are getting longer, it shows that the strength is stronger, right? When the histogram bars are above the zero level, it shows bullish momentum or bullish strength. And when the histogram bars are below the zero level, it shows bearish momentum or bearish strength. Okay, so it actually helps to add an extra layer of confirmation before you make any decisions, right? The zero line acts as a baseline to help you quickly recognize overbought and oversold conditions. When the EMAs cross over this line, the zero line, right, it often signals a potential trend change. That is a massive help when you are scanning for entry and exit points. Okay. Meanwhile, when the blue line crosses above the red line, it's a buy signal. Okay. It's a buy signal, especially when the crossover happens close to the zero level and both lines rises above the zero level alongside the histogram bars. So that's even a bullish confirmation. On the other hand, when the blue line crosses below the red line, it's a sell signal. Okay. So this kind of setup is perfect for both beginners and advanced traders. Beginners will love the clean, color-coded design that simplifies market reading. Advanced traders will appreciate how much faster they can assess market momentum and confirm signals without second guessing themselves. All right. When it comes to picking the best MACD indicators for MetaTrader 4 and MetaTrader 5, this one truly stands out, right? It is cleaner, faster, more detailed than the basic version. Exactly what serious traders need to stay sharp, and on top of the markets. Okay. So like I always say, risk management is crucial, irrespective of the indicator, irrespective of the strategy that you are using. Do not trade with an amount you cannot afford to lose. You need to have peace of mind when you are trading. You don't want to have high blood pressure. You don't want to develop high blood pressure because you are a trader. Trading is not supposed to take away your peace of mind. Trading is not supposed to take away your peace of mind. Trading is supposed to be something that that you do and remain healthy while doing it. You don't want to fall sick because you are depressed that the money in your trading account, if it gets lost, you don't know what to do anymore. Okay, you don't want that to happen to you. So ensure that any money you are using to trade is an amount that you can afford to lose. Nobody want to make losses, right? But just ensure that it's an amount you can comfortably risk. I'm not saying you're going to lose the money, but of course losses are part of the game. But of course you should know that trading is risky, so do not put in the money that if it gets lost you're going to get depressed or something. And then ensure that while you are trading you employ good risk to reward ratios. Okay, for example, let's say I'm picking a buy trade around here after I get my bullish crossovers and all, and then my stop loss ideally should be below the recent swing low, right? So if before I execute that trade, I should already calculate my take profit level. So my take profit level, of course, are around resistance zones or thereabouts. If my take profit level is about ×2 of my stop loss level, then that's a good trade. I recommend minimum of 1:2. So your profit should be at least ×2 of your loss, of your risk, your potential profit. Let's put it that way. The number of pips for your take profit should be at least ×2 of the number of pips for your stop loss, so that even if you have equal number of wins and losses, you'll still be on the winning side. So if this breakdown helped you see how powerful a great indicator setup can be, smash that like button right now. It really helps get this content out to more traders. And if you want more deep dives into the best trading tools and strategies, don't forget to subscribe. New videos drop every day to help you level up your trading game. Thank you for watching, traders. Stay focused, stay sharp, and I'll catch you in the next one.